Good morning, everybody. I am Mark Sebastian, your only option, and this is the Option Pit Ticker Highlight Show. It is Tuesday, February 20th. Normally, we do these on Mondays at 10:30 Eastern Time, but because Monday markets were closed, we're doing it on Tuesday. This week, our stock in focus is Microsoft. The maker of Office, the maker of, the partner of ChatGPT, the Azure cloud, so much, the largest company in the world. And over the last year, they're up about 50%, meaning in 1 year, the company has put on $1 trillion in value. And I know. So that is going to be our stock in focus. With me, as always, are the other two members of the triumvirate. One, Leisha J. Leslie, the Queen of Candles, and Andrew T. Giovinazzi, the Oracle of Options. So we're going to start with a look at the charts, and Leisha is going to take it away by walking us through what she sees in Microsoft.
I have very interesting overlapping. So if anyone that watches me knows, I look at two charts for each stock. Just sometimes I keep my moving averages on this chart, and then in trading view, I have my pitchforks. And an interesting, which I think is going to end up being pretty strong support in Microsoft here, is this previous low 397. That'll hit first, and then this previous high, 380, 380. But it's interesting because this very long trend line, going back to just last few days of September, has held, and that comes in today right at 397. Isn't that interesting? So watch the 397 area. That should be some pretty good support. Below there, we have the 50-day, 389. Looks like a rounding top possibility coming into play here in Microsoft. So it looks lower. And then if we do bounce and go higher, this median line here, 404 3/4, will be your resistance on the way back up.
So Leisha, where would you set up your your inflection point there for? Because when I get to the vol part, vol's pretty low in here. So where are you looking for your sort of inflection areas? Well,
like I say, I think 397 could be a possible bouncing spot. Whether it holds or not, it could initially bounce and, come back and trade through it, or it could zip right through. We know anything can happen, right? But definitely 397, I'm seeing as some really pretty good strong support. Okay. On two spots. So that's why I say it's strong.
All righty. So I'm just trying to.
So the stocks, the stock has had a really nice run. It's actually doing better than a lot of the names on Tuesday. I don't know if you guys just saw, Nvidia's down $42 right now.
$42.
Yeah. SMCI is down 100. AMD is down. We're seeing. Obviously, ahead of NVIDIA, there is a lot of people saying, I've made a lot of money. I don't know if I want to be involved in these earnings themselves. Now, Microsoft has already reported, and what I thought was interesting was that initially, and Alicia, I'm going to steal. Do you got anything else you want to show on the chart before
go ahead, take it over.
All right. What I found was interesting with Microsoft, let me get was on their last earnings, they reported great earnings. They initially sold it, and then over the course, it has run a new high, and now we're right back. Our low today kind of lines up with the close on the day after earnings on the 31st, which is kind of interesting, right? It's amazing how we revisit numbers, right? But you look at the fundamentals, and this is a $3 trillion company with a trailing 12-month PE of 36. The forward PE is still 30, which if this was a $100 billion company, I could accept. If it was, in terms of maybe this thing can keep growing. But at $3 trillion, all right, and yes, their revenue is growing, but in order to get to a price earning ratio that is in line with the valuation, the earnings are going to have to grow by about 30 to 40% over the next year. That would be where the number comes in well justified.
It's feeling pricey.
Yeah, it is. It is. It's pricey. It's not outlandish. Like, it's not SMCI or AMD or Intel or NVIDIA. But for $3 trillion, it is pricey. How much higher can this? How much more can you expand a single company that is bigger than the economies of
all of Latin America,
90% of the world? All right. That is kind of my point. There are very few countries that have GDPs higher than $3 trillion. And that is what you've got to wonder, we are in an area of PE expansion, but has the PE been expanded as much as it can? And my take is that we're about there. So what does that mean? Well, there are generally two ways to correct, right? We can correct in price, which people always think is going to happen. But the more often type of correction we see is a correction with the use of time. And so if Microsoft doesn't go anywhere for 6 months and the earnings grow and that PE contracts, not because the stock is falling, but because the earnings are growing and time is passing, that is where I could see a scenario of Microsoft. Now, if we have some real economic issues, the speed with which we could see some of that PE expansion deflate puts the downside at risk. I think people would be shocked how quickly this company could chop $300 to $400 billion off its market cap if people get wind of an economic recession, or the AI boom starts to fizzle a little bit. But even a $300 billion reduction in market cap, you're talking $40. So the downside here is 350, somewhere in like that, in a worst case scenario. Not in a worst case scenario, in the bad scenario. The worst case scenario is, we enter some sort of real crisis and, everybody's throwing out the baby with the baby. What is the baby with the basket, or what is it? The baby,
baby with the bathwater.
Baby with the bathwater. Right. Thank you. The baby with the bathwater. Then that's one of those where it's like, who knows? But in a normal market, the downside here is $40, $50. The issue is I don't see a ton of upside. Near term, ahead of NVIDIA earnings, I see more downside than up. But long term, this is one of those where, as an investment vehicle, if I want to own Microsoft, which I think people should want to own Microsoft, it is a well-run company, then, I'm looking at, some sort of put selling regime. I can sell the 350 puts for 2025. These have about 11 months at $15, and then buy a 250 put for $2. So I'm collecting $13, putting up $8,700 of risk. I'm not buying the whole stock, but if the stock kind of sits here for the next 6 to 12 months, which I think it will, I'm collecting the premium. If we do have some softness and I get the opportunity to buy the stock, my net purchase price is about $330, which I think is on the low end of where fair value would be, or even cheap. So that would be kind of my investment thesis, my investment approach. From a trading approach, I'm going to before we dive into what we want to do as a trade, let's have Andrew share his insight on the volatility as the designated oracle of options.
Volatility insight. I guess we need volatility insight song. Volatility insight.
Oh man.
A song for everything. Pretty soon you'll be doing a song per trade.
You know what, Leisha, and then that's when people start leaving the room.
I'm gonna get you one of those old timey hats and one of those like red and white coats to wear for all these events.
So here you could see, like, definitely not at the bottom of vol anymore. So what I would say is, and to Leisha's point here, we had this kind of rip, right? And we drove vol to the bottom. And now all of a sudden, post earnings, vol is lifting. I still like the apple soup. So post earnings, you have vol increasing, which everybody knows. Well, I shouldn't say everybody knows, but I would say that is a counter trend activity. So vol is jumping. So also it is still very much at the low end. So this yellow line here is 60-day vol. I don't think we need to go out that far, mostly because we have such a huge event coming. What I would say, though, here is the last couple days, you had earnings, right? We had earnings were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, right? So your 10-day vol, I would say, is pretty clean. So it's around 22% volatility. Now, Jose saying, I see a double bottom forming. So is the double bottom forming good or bad, Jose? So my thought here is I think volatility is probably in the fair range for Microsoft. The fact that you have increasing now, so you got this spike in vol 10 days ago because you had this earnings slide and recovery. I don't think the market has given this up yet. Okay, I don't think the market has given this up yet. So what I mean by that is the volatility we have had, like this was pretty like steady vol crushing rally. And since we've had earnings, oh, that must be what's going higher for me here. Let me see my watch list. Okay, yeah. I got to close some call spreads and SPY. So that's probably the bottom for SPY. I don't know, just feels like it. Anyway, so what I would do here is I want to err on the vol on the like buying vol, but I would want to spend a little less money. So I would kind of think of, I don't know about a call calendars could work with maybe a put in protection, something like that. Because like I said, Leisha said, if it breaks below 397, it could fall apart. So again, my thought is some kind of call calendar with the relatively low vol, maybe a put for protection, something along those lines. And we could set something up like that. Door number 2, I thought would just be like a straight strangle, but we buy the call and a put spread. So again, I'm not as worried about Microsoft falling apart, although it could, but I think what you want is like, you want to have the easy call close in my mind. So you want the call to close easier. And if this market weakness continues, Microsoft as a bellwether will likely outperform. So I would think in my head, call and put spread of some sort. How about a fly? I think the volatility is too low for a fly, William. He's asking about a fly. I would like to see higher vol. Like, I don't like butterflies when the vol is this low. If you wanted to buy a call fly out, 4 months from now, that'd be a different story. To reduce cost, but short term.
Yeah, the one thing that's interesting on the upside, Andrew, for a potential fly is that, again, this is always a sign of a frothy market, is that upside curvature. There's upside curvature and downside curvature. This thing looks like Yahoo.
The 410 calls, we were just there. They're only $2.50.
I know.
I would do something like, the 97, I would do like put spread here, like maybe the 95, 87.5 put spread, and then look at the 410 call against. So I would strangle on like that, leaning like just like a little tiny bit long, because if it like Lisa said, if it breaks down below 497, right, then our put spread will pay us some money. Like, yeah, I could even see like the 95.85 is only $2, right? It's like 230.
You know what's interesting, Andrew? These names are starting to look like tech in 1999, 2000 from a skew perspective. Now, skew is the relation to at the money implied volatility to out of the money calls and puts.
Oh, wow. Look at that in March. You're right.
And I want to, so I want, Andrew, I'm going to steal real quick because I pulled up a skew chart. And I want everyone to see this. Andrew, tell me how much this looks like Yahoo in 1999.
Yeah, I know. Kind of crazy.
All right.
So
you're
explain to what the chart looks like and where the lowest vol is, Mark.
So the lowest vol, Microsoft is trading 399. I'll just pull up March so that we can just see March. So the lowest vol is just out of the money on calls. All right. Which is why Andrew is honing in on those 410s. They're literally speaking the cheapest options. But then you look at the wings and you start seeing vol very big. So here's all premium. I'm going to do all premium over 15 cents. And you can see that there is a bid on calls and a bid on puts. So you've got this U-shaped implied volatility curve, which tells us we do want to buy near the money options. But spreading does have some real benefit to, putting some edge in our trade. So that's why Andrew's saying, I want to buy the 410 calls. He's literally picking the cheapest option you can buy in Microsoft. And then the 395s, well, they have a little bit of juice. Thus, did you hear Andrew say, I might want to buy a put spread? Well, gee, he's buying the 395s. And if he's selling the 385s, he's getting a really nice bump in implied volatility. The 395s are about a 21, call it a 22 implied volatility. If he sells the 375s, he's selling a 25% implied volatility. So that is where him saying, I want to buy a put spread and I want to buy a call. That's where and I know he didn't need to pull up this chart because there's a reason why I call him the Oracle. He looks, he looks at a picture of implied volatility on his option montage. And without having to look at that skew chart, the numbers hit him. That's one of the benefits of having done this for 30 years. Right, Andrew?
It's one of the benefits, yes. Just being an old guy.
The numbers just hit you. And, so he literally gravitated to legit the cheapest option he could buy, and then said, I want to buy a put spread because his eyes just said, oh, look, I'm paying 22 and I can sell 24 if I sell the 380s, right? The 395s are for March are $6. You're still getting 250 for the almost 250 for the 380s. And that is because that implied volatility is on the downside is lifted. And then you've got YOLO. And then on the upside, you have a big YOLO bid on all these calls above kind of where it's recently traded.
We have kind of like, you got kind of two speeds. You can either have the instant gratification post-Fed speed, or you go to the March ordinary with a little bit of, let's say if we have a longer term trend post-Fed.
Yeah, I mean, to your point, the March ones, the 395 puts are about 370, and you're getting $1 for the 380s. That is some pretty filthy curvature, buying 23 to sell 27. And then as I said, he literally went to the cheapest option on the board, the 410 calls. They're 250. We were just there.
And we were just there.
So that is how
you got the March one up. Yeah, that's
So that is
I'm
how
looking
his
at that strangle for around 505.
That is how his brain and that's how his brain views things, how my brain views things, how Alicia's brain views things is, the numbers hit you before you can, without even looking at a chart. So Andrew, I like the play a lot. The put spread versus the call makes a ton of sense.
You guys should have got in the app. By the way, people are asking about the announcements and stuff.
Yeah,
so I'm trying to get this trade out to Christian here. So I am going to. I'm writing it up so Christian can post it here. So I know we're running out of time. I got to get to.
If you want a simple trade, I would simply buy the 407.5 calls for 330, and if it trades below 397, I sell them. It's that easy.
So Christian, these are buy to open. So I'm giving this to him.
All right. Andrew's going to get this trade out through the app, and we're going to get back to business. We got to jump to trading desk. If you don't know what trading desk is, you're missing out. We crushing on some strangles. So Andrew, myself, and Alicia want to thank you for joining us today. Alicia, thank you for the charts. You saw my kind of fundamental analysis and Andrew's analysis on the implied volatility. We've developed two trades. Andrew's delivering a March 1st 395 380 put spread, or the 85.
I got the 95 85.
Yep.
And the 410 call. Whoops.
So he's buying the 410 myself, of course. He's buying the 410 call, and he is buying the 85 95 put spread. So he's buying the 95 puts, selling the 85s. And if you want a simple trade, because we're right at kind of that bounce back point, I would buy the March 1st 407.5 calls. And if it trades below 397, you just exit.
All right. I'm trying to get it filled right now.
All right.
You're going to do better than, let's see here. 85.
NVIDIA is $10 off.
I'm looking at like 475, 480 for it.
All right. Well, on that note, I will wish everyone a wonderful day. So for the Duchess of Doge, the Queen of Candles, Alicia J. Leslie, and the Oracle of Options, Andrew T. Giovinazzi, I am Mark Sebastian. I am your only option. And we want to thank you for joining us here at the Option Pit Ticker Highlight Show.
See you guys later.
Have a great trading week, everybody.
Bye-bye.